Well, after a day off for not the King's birthday, the local share market had a bit of catching up to do, since on Friday the main US index fell 2.6% and the Nasdaq Tech Index 4.2%. That was because of the old good news is bad news story, which is that job growth in the US was much more than expected in May, showing that the economy's fine, which means there'll be no rate cut when the Federal Reserve meets next week. And in fact, the next move for US rates will be up, even though President Trump has installed a new chairman, Kevin Warsh, with strict instructions to cut rates. Last night, the US market rebounded a little. Also, the Korean market rebounded a lot today after yesterday's jarring 8% fall. It's still up about 90% this year because of frenzied buying of semiconductor stocks. The Australian market was still catching up with Friday's action, so falls today by miners and banks took the index down. The oil price fell about 1% today, which means it's dropped about 7.5% in 4 days. So commodity traders seem to think the Middle East conflict will end soon for some reason. Gold fell again and is now down 20% from its peak. But digital gold, otherwise known as Bitcoin, is down much more, 50% from its peak. And the Aussie dollar is steady at 70.5 US cents. Now, we learnt today from the ABS that the value of all dwellings in Australia was $12.8 trillion at the end of the March quarter, an increase of $316 billion, or about $12,000 for every man, woman and child. Now, it's just paper wealth, of course, and since then prices have stopped rising. But more importantly, the number of houses is surging. This chart shows the quarterly change over 15 years, and the March quarter increase of 54,000 was the biggest in a decade. It might even reach the quarterly target the way it's going. And that's finance.